What's up YouTube, it's Louis here bringing you today's cryptocurrency video. Sorry if you can hear my little chihuahua in the background. Yeah guys, thank you so much for 750 subscribers. I already did the giveaway. That's on my Twitter, so don't worry, there's going to be another giveaway again for 500 followers on my Twitter. So all the details of that when we get close to that will be there. So make sure you're following me on my Twitter, because that will be one part of the giveaway. Subscribe here and follow me on Twitter, and then the rest will follow. Perfect. So last night we had the monthly close for Bitcoin, and I've turned on this EMA. Now of course, I'm a bit different to Coinskin in what I learn. Of course, I know the 20 and the 55, but I also use the 200. But on the monthly, we haven't had, it's just not appearing 200 months. So another EMA that we can use on the monthly is not the 10, but the 12 EMA. I'm going to show you why I use the 12 EMA and not the 10. So if we turn on the 10, you can see that you have fake outs here. You've got nice touches here, but quite a few fake outs basically. And then the 12, just for me anyway, it's just for me. That's why I use the 12. It's just a better fit for me. So look over here when I press enter. It's catching that all very nicely now. It's all sitting on it, where before we had loads of fake outs. Just one here. And of course, this was the C dump. Don't want to say it. But yeah, look, bouncing off exactly basically. So this is why I use the 12 EMA. Only on the monthly time frame, really, guys. I don't really use it any other time, to be honest. So what happened basically yesterday, before this monthly close, this was down here at 43k, and now that's sitting at 46. Now it's sitting at 46k basically. So worst case scenario, if you were ever to roll over, which I don't see it happening, because even over here when you rolled over, you're not touching it. So it'd be even above that. So really it'd be the swing high, which is at 47k, which I don't see at all, guys. What's also nice is that with this candle, you actually came down and retested this wick over here. Can you see that? They're in line with each other. So you just flip resistance into support on the monthly. Now everyone's like, oh, this is a double top. You got a shooting star over here. We're going to go down. Look, as long as we're closing above the low of this, then we're all good. And we've got 31 days to do that. So everything's beautiful at the moment because your emails keep creeping up on the monthly time frame. Let's go check the fear and greed index. So yesterday, last night we printed the 34 basically, which is crazy, guys, because obviously us technical analysis can see, we're very close to the bottom, but people that don't know what's going on are still fearful, still pressing that sell button. And what are we doing, the smart money? Pressing that buy button. See, what did we do with Solana? If you took that free trade, amazing. What did we do with Solana? I said once we get to $200, we're going to enter a trade on Solana. I think it went down to 185, but I'm holding, you know what I mean? My stop loss was way under $160, $150. I think it was at $150, my stop loss. And you had loads of technical analysts, like honestly, like with 100k followers, literally saying Solana's going to $150. I had this like a month ago with another huge technical analyst like Bitcoin Census and Cryptonary. Bitcoin Census a month ago was saying Solana's going to go to 175, and it didn't go anywhere near that. It literally had a wick down below 200, and then we started flying off and then made a new all-time high. So you need to be very careful with who you're listening to. Of course, I'm a little YouTuber. I've just started out on YouTube, but I have been doing this for more than a couple of years. So you also had Cryptonary yesterday saying, oh, because you're below $200, you're going to go to $150. No, guys, literally all that was happening with Solana is that it was wicking below 200 and then getting back above. So it's just fake out. So all these analysts that have hundreds of thousands of followers don't even know what they're bloody doing. Of course they made money. I'm not going to doubt that, but they're just fudding their own followers, and then those followers are, okay, I'll sell, I'll wait for 150, I'll get back in at 150, and where is it right now? Like $220, when my guy was saying $150. And what was I saying? Once it gets to 200, I'm entering trade to 300. Simple as that, you know what I mean? So I will make a Solana video today, so you know what I'm talking about. But I have already posted my Solana update on Twitter. So let's take a look at the whale basically. So the whale last night at 1 a.m, well, my time, UK, GMT, bought 356 Bitcoin. Not once in this dip has he sold. So when did this dip start? Like the 11th. So since then, just buy, thousands and thousands and thousands of Bitcoin. He's just piling on. Look, at the start of the dip, it was about the 11th. He had 107,000 Bitcoin. Now he's got 115,000 Bitcoin. So you want to be doing what he's doing. You don't see any selling. Look here. What price was that? 67k. So he sold the top, and as it was coming down, what was our top? 68, 69k. So he literally sold the top just before we got there and started buying as it kept on dropping. And yes, it's nice that yesterday he did even buy at 57k. So guys, if we now take a look at the weekly time frame, you can see that we held the, so yeah, we can use this on the weekly, maybe even the daily, but I don't really use it much. I just use the 20 and the 55. But the 12 here, you can see that we had the bodies of the candles close here. Amazing. And you wick down to the 20. So if you ever lost the 12 EMA, you'd come down to the 20, just as shown over here basically. But if you can keep a hold of, what's the level? If you can keep a hold of 56,539. So I'm looking over here on this one, but I have to keep my cursor over here, otherwise look, it's constantly changing. So $56,539, we want to see that hold on the weekly basically. If not, if you lose that, you're going to come to the 20, and yeah, if you lose that on the weekly time frame. So if we close out this weekend below, we're going to come down to here basically. So that's it for the weekly. You did bounce off this resistance. You didn't quite meet it exactly. If you look over here, the high, and then I'm going to look at this candle and look at the low basically. So I'm going to hover over that. So the high of this candle over here was 52,956, and the low of this candle was 53,300. So like 300, 350 off, dollars off. So it's not the worst. It's not the worst. You did come to, let's check. Yeah, you came to this wick exactly, and this is actually what I put out in one of my early Bitcoin videos. I was thinking that the bottom was going to be 54,500, and then I brought it down to this wick over here. I think this green one over here, 52,500, and now I was lining up with this. Of course, that is the exact level where I put the line at basically, because of resistance and support. But no one was looking at this area. And of course, if we take a look at the daily time frame, if I can find that area again, yeah, here. Can you see resistance, support, and look where the bodies were sitting at, exactly there. You had a fake out and you come back and retest where? That level basically. So I'm going to turn on the drawings now and look at the daily time frame. Oh no, my mistake guys, I didn't put it there, I put it just here on that support. My mistake, sorry, I didn't have the drawings on. So yeah, we had this rising wedge over here that I didn't see many people talking about. That's why I thought that we were going to come down to this level over here. So that was the second reason why I thought we were going to come to this level. Technical target met exactly, but I didn't remember anyone talking about this rising wedge, only the falling wedge. So I'm going to delete the rising wedge now because your technical target has been met. So what we do need to see, let me turn off that 12 EMA now. So what we do want to see on the daily time frame is for us to reclaim the level of 58,500, which I've been talking about for so long now, because until then, this pattern over here is valid. So we want to invalidate this M pattern. And the only way to invalidate it is getting above 58,500 and confirming that as support. Until then, you are technically in a technical target down here to the 200. But look, as the days go by, the 200 is creeping up, so it's highly likely that you won't even come down to here basically, because you're in this falling wedge, which is going to take you back to the top essentially. And yeah, you have broken out of it, back tested it yesterday, but if we do ever lose it, I've already given you your technical target, so we will go and look at that on the 4-hour time frame now. So remember guys, I told you that back over here we had this descending triangle with a technical target down here, and look what you met, like a freaking boss. You met the technical target like a boss. And the reason why I said we were going to come down here, if we take a look at the 1-hour time frame, so this was the descending triangle over here. Let's remove them drawings now to clear it up for you guys. So there we go. Is it that? Yep. So the reason why I told you we're going to come down here was because out of this ascending triangle, that was your technical target at this red candlestick. So I forgot how I did it. Was it from here? Yep. Yeah, exactly. Because we didn't have this wick when I gave you the technical target. We were in the ascending triangle. Then you wicked down. Well, you were down here and basically pushed back up, forming this bullish hammer, which is a bullish reversal candlestick pattern. So it basically means if you're in a downtrend and you're at support, it must be at support. Once you're at support, then it will reverse the trend. If it's not support, ignore it. Look here. you're at resistance, ignore it. It's a hanging man. It's a completely different candle. You get caught out by that. I used to, because how I got taught it by multiple traders, by mentors. I worked out a lot of this stuff from experience, from just literally like being told, yes, this does this, and then doing that, and then seeing that it didn't work, and then finding out, okay, this stuff works at certain locations, but in different locations it has different meanings, and that's why it didn't work basically. So like here, that candle is the same as this one. This one's just got a thicker body, but because this is free falling and at resistance, the 55 EMA, it's not a bullish reversal candlestick pattern. It's a bearish pattern, bearish reversal or bearish continuation pattern. So in this case over here, it was a bullish reversal. But if you now see it in the uptrend, like just here, this green one here, it's a bullish continuation pattern. But again, if you see it at resistance right here, it's a hanging man. So it's just hanging in the sky by its neck, and then full kaputs. So right now, oh yeah, I was telling you why we came down to this target, because I'll get you the target. Oh no, how did I do that? Oh yeah, I remember. It was this descending triangle over here. You fell out of it and you met your technical target eventually, and that's why I said that we're going to come to this level, because also this red candle here. Remember guys, I said that. Ooh, let's drag this a bit. So remember guys, I did tell you, if we ever lost this line, at that moment we had an M pattern, but things change, you know what I mean? So we have to adjust our lines. So we had this M pattern over here. I told you if we lose the support here, we got a technical target back at the ascending triangle, which I told you anyway, before this pattern had formed, we needed to come back to anyway. It doesn't have to, but it's highly likely that it will. So don't be disillusioned to that fact because you didn't retest it as support. So even though it's looking all nice and you're holding support at the moment, you can still roll over. And actually, you're forming quite a few patterns in this location over here. You got two. So obviously that M pattern, but that target's down here, but you've actually formed something else over here. So we do have two patterns. One is a descending triangle, which is a bearish pattern, and that will probably bring us to the support of or down here or here basically. So let's check that with you guys now. So I'm going to measure from this wick to the support. Once you break, oh look at that, what did I say? I'm going to probably come back down to 54,500, which was what my original level for you guys that I was telling you guys that we must hold. Oops. Yeah, that was the level that I thought we were going to bottom out at, which we did. We lost it, got back above it, lost it, and then we never retested it. So if we do fall from here, I'm going to retest that. Maybe come down to a wick and then hold this level, because that's your technical target out of the M. So I would not say that it's a head and shoulders, because this shoulder over here is higher than that. So I'm not saying, I never said that this was a head and shoulders, because your shoulders need to be similar lengths, and this is way higher than the head. So you want the head to be the highest. So we have this descending triangle giving you your technical target. If you don't agree with that being the technical target, just do it from here to here. Basically same target. So either way guys, once we lose this support, and this support is, once we lose 56,933, we have a technical target down at 55k, but also a technical target at 54,500 basically. And so you could actually just come down to the blue line, and you could invalidate this pattern over here. And how? By coming down, finding support. Sorry if you can hear the dogs. Coming down, finding support, and getting back above this, confirming it as support, breaking out, and heading up basically to 60k. And we know once we're at 60k, I think we're printing a large, let's see. Oh no, that was this double bottom, which didn't work out because you didn't validate it, because you didn't break above that. So once you break above 58 or 59k, some people may disagree, this would be a double bottom basically, and you measure from down here all the way back up to there. Because there's certain types of W's, guys. I'm going to draw them out for you now. So you can have a complete double bottom like this. You can have a higher low like that, and you can also have a lower low. This is what we see for a lot of altcoins like that. So these are your three types of W's, and it's the same for M's if we just reverse it like that, okay? You can have a higher high here and a lower high. And that's what we saw with Bitcoin. This is the one that we saw with Bitcoin recently when it formed that rising wedge. So we'll go and look at that now. So delete these, and we'll see. Look at that M pattern that formed with the higher high, and that's this over here. Can you see that? You actually formed a higher high, but I'm guessing in the RSI, yeah, look, on the RSI you had a high and a lower high. So this is hidden bearish divergence, because on the chart you're actually getting higher highs, but on the RSI you're actually already lowing out. Look over here, which is over here, this is already telling me that over here you're already overbought, and then when you're even higher you're less overbought. So it's like, basically this was already telling you that you have to look for your, well, if you were trading this, your get out signal basically, and you could have waited for your hidden bearish divergence, or just bearish divergence. So yeah, one of the patterns over here was the ascending triangle. Let me move this out of the way, I'll use a different one. So the other pattern that we have over here, if we can remove all these drawings now, is a diamond pattern that no one's been talking about. So we have a diamond pattern over here, and I'll give you your technical targets, because this can actually break out both ways. So let's get this exact for you guys. So look where that support is of the diamond pattern, exactly lining up with 56,900. So if we do lose that, I'm going to give you a new technical target to the downside, just like that, measuring from the top to the bottom. Once you break out, oh, amazing confluence. So you've got two patterns basically that might take you down to this level. So that could wick all the way down to here and get back above these two levels. So that's the bearish scenario. Let's get the bullish scenario. So the bullish case, let's just drag it so it's like that. So the bullish case, if you can break this descending line, so I can't really give it to you. We are coming to the apex now, so a break is going to come soon. Of course, we do want the retest down here, but let's say it does break out to the upside, it's going to take you to 60,000, basically 60,300. So I hope you understood that with the diamond pattern. I know it can be a bit confusing because all the lines are overlapping. So actually I'll put it back on and then take away the EMAs for you guys, because in this moment over here you don't want to be looking at the EMAs. So sorry that I didn't take them off earlier, because when you're in consolidation they're not useful whatsoever. Only in a trending market you want to use the EMAs. So over here with the diamond pattern, you measure from the top to the bottom and you just put down the breaks, whether it breaks to the upside or to the downside. Perfect. I hope you enjoyed today's update. We're just waiting for Bitcoin to decide which way it wants to go. Check out my Ethereum post on Twitter and my Solana post on Twitter. I was just doing some little updates. I hope you enjoyed the video, and I'll catch you in the next one. Peace.